What's up, guys? Welcome to our weekly market analysis. I am Week1. Some of you may know. Let's get it. So, we have Week 75 here. How do we analyze it? And I've already pointed out a few key things here that aided my judgment. We all know that this is a zone here. This is a zone. This was a strong zone. But the rule of thumb that I have for zones is simply number one, you want to have fresh zones, in the sense that you want a zone that has not been tested more than once. More than one time. After the zone has been tested more than one time, it has lost its potency. It has been, permit me to use the word, disfavored. So when you see over here, price tested this zone. Price tested this zone here first time, tested second time, tested the third time here. There is no way you're gonna buy here. And so you know that all you have to do is wait. Whenever price breaks here to retest this zone, you're going to have your sales. But then how do you get the sales? One way is waiting for price to retest, and while it has retested, inside the retest you just take your entry. And another more accurate way is this. The more accurate way of taking this cells. Back to what I said here. You can see. So this was the first time this zone was created. Tested again. It went up, fine. But there is no way I am buying from here because of what happened here. It is not fresh anymore. It's like old food that has been in the fridge or that has been in the kitchen for too long. It's not as sweet as the first time your mom comes back or your wife or something comes back and cooks it for you. Same thing. So how do you make your entry? Apart from when it has retested. One trick I use is you can use the exponential, the EMA here. The 9-day EMA is kind of like orange. The 26-day EMA is green over here. So what I do is I wait for price in a trend. So we had a downtrend over here. You see this was a downtrend. So what I want to do is I wait for price in this trend to form a doji. And you know doji is a sign of confusion or reversal in the market. Primarily that's just what the doji signifies. It signifies confusion or I want to reverse. You can see over here that we had like two dojis. We had a doji here, here. This was by like 4 p.m. yesterday because this is 12:45 a.m. 4 p.m. yesterday. Saw it. Was inside doji on the 1 hour, very close to the 26 MA. Bro, I'm going in. Went in, punched to 5, done. However, you have a second chance at redemption. You missed this one. One of two things can happen. Price can come back to this doji over here. Price can come back somewhere here because you can see it's bullish. Price can come back here and sell. However, you still take your TP here because you don't know what's going to happen. This is the zone. Or if you have anything that makes price break here, once price breaks here, retest here, you can take a sell. But I would have preferred if you entered here. It's kind of safe. I'm already out of it because 5R. For those of you that have been following me, you know I'm a 5R guy. 5R easy. 5R is easy. Not so easy, but it's quicker to hit. When you get your 5R, you go out. The second thing we trade is 25S. Obviously downtrend again, right? And remember, the previous entry that I just showed you guys is on the green MA, the 26-day MA. You wait for price to go there, engulfing or doji, then you take your sell. Example here. Price broke this low, broke this other low, right? So price first broke this set of lows here. And then it came, broke this whole set of lows here again. So when price did this, we're kind of sure, okay, it looks like it's going to be in a downtrend. Price, again, the audacity of price. Price had the audacity. Broke here. Bro, we're in a downtrend, settle. even from here, we're in a downtrend. So remember what I said, engulfing a doji in a trend. So we had an ugly ass looking kind of like doji here. Then this was an engulfing. What would you do? Immediately your entries here. Alright. For VIX 25s, I have a stagnant figure for my SL. I don't use stop losses based on market structure or anything. Stagnant is a stationary figure. And then, which is 140 million, 1,000. Boom, 5 hour, delete. And then you can see another entry here. This is so powerful. Another entry in a trend. Price went up. This is the 26. You formed the doji, formed again. You could have entered. If you entered here, boom, another 5 hour. That's why risk management is the key. In the sense that you made 5 hour here, made 5 hour here, you lost 1 hour here. It doesn't really matter, does it? So you made, if you're risking $10, you made $50 here, 50 here, you lost $10 here. You still have $90. That's good from where I come from. And you can see the price came down. You can see dojis, boom, touches the 26 MA, going in, I went in, and I've been dancing all day. So the only fact about correlation that I have for VIX is that you cannot have VIX 75 and 25 1S going in the same direction. One must lie. So it's either 25S buys, 75 sells, or the other way around. So I'm expecting that one of these trades disappoints me. Right. So the next, we're gonna just analyze currency a little bit. For you guys. I use correlation in currency a lot, and in currency, USD CAD is king. Why is USD CAD? Why USD CAD is king, at least to me, is because whatever USD CAD does, AUD USD, AUD JPY, GBP USD, GBP JPY, NZD USD, NZD JPY do the opposite 80% of the time. So by 3 a.m., this was a very perfect entry. USD CAD, 3 a.m. Sell. What did I say? If USD CAD is selling, XXX USD, XXX JPY is buying. Same time, what was the time? The time was 3 a.m. on the 27th. If you were awake, it was like 2 hours from now. If you were awake, so AUD USD, I expect it to buy, right? 3 a.m., right? 3 a.m., 27th. What has been happening? It's been bullish from here. You don't even need too much of an analysis unless there is news, and then you have to be careful of 1 or 2 trades. So you see NZD JPY, 3 a.m., 27th, right? 27th, 3 a.m., JPY, NZD JPY. And you can see here as well, same thing, 3 a.m., 27th, boom, has been going up. You don't want to come down. Doesn't want to come down. Same thing on GBP USD, 27th of November. What really happened? 3 a.m. And because you know that the dollar is falling, have the idea that AUD is buying and AZ is buying, excuse me. So when dollar is falling, AUD is going up, GBP is going up, NZ is going up. These things are literally against the dollar. They have some kind of beef, right? So when NZD is going down, AUD is going down, GBP is going down, we know that the dollar is going up. So you don't have to spend so much time analyzing all your charts one by one. You look at USD CAD, have an idea what the market is doing, and then you act judiciously. God bless you guys. Stay neat.